All right, I've never actually done this before, but I'm Drew. Um, and yeah, let me give you all a introduction to the world of organized crime. Um, so, so I guess we'll start off with a curious case of APHB. I'll give you a little bit of my process. Because this was yesterday's little fun one. It blew up a couple of, well, it didn't blow up, but it caused a couple of good traders, that are kind of respected, a lot of money. And let me show you why I was very quiet on this yesterday, because usually as a play develops, I'll just say, this is a turd. But yeah, this one was a super turd, but I didn't even talk about it because I didn't want anybody to think about shorting it for this very reason. And then I ran out of borrows on it, so I didn't even get to write it down. So that really sucked. But anyway, y'all don't want to look at a chart. Y'all want to look at the goods. So and before I show you this, with great power comes great responsibility. I will give you the confidence to take one of these and hold it. But the problem is that this company was a great short here, 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 and then finally up here where it actually ended up working. But you have to mix technical knowledge with the fundamental. Otherwise, a great short. I mean, the company was just as turdly. Can you see my arrow?
Yep.
Okay, so the company's just as turdly right here at 250, and oh yeah, you blew out. Sorry, you don't get to play stocks anymore. So just know that you can't just take a position based on the fundamental knowledge. So this is a site that Jeff actually recommended to me. It's microcapsearch.com. And here's my thought process. You type the symbol in right here. Gives you easy stuff, but I like to go to the institutional ownership first, which also takes me to the most useful site, which is the NASDAQ.com. And so I instantly see the institutional ownership, which gives me a lay of the land. Anything 20% and lower, who cares? Anything 50% and higher, I'm raising an eyebrow, because if people are wanting to hold large, if institutions want this stock, then I need to slow my roll if this thing is steamrolling people. Oh, who wants me to? Oh, sorry. Yeah, I'm speaking. My name's BarkTrader. Or Drew, if you really know me well. But so first step is see, I'm not used to talking to myself. Is the institutional ownership, and then right off the bat, you want to evaluate the news. So you go to press releases. You want to find out, why is the stock up? Because these stock, anything under $10 is junk. It's a fact. It's under $10 for a reason. So these stocks are guilty until proven innocent. They're turds until it proves to me it's not a turd. It's just a matter of time. So ignore this, because that's an afterthought. Obviously, it filed at 10:02 p.m. By the way, unethical. But so this is the fourth. It's going up crazy, and there's no news. Nothing. Okay. Let me look at the filings. This is the gravy right here. Y'all still with me?
Yep.
Okay. Here come the filings. And page is taking just a little longer than usual. Okay, and I'm doing this as the stock is, it's, as the stock's going nutso. I'm not, I'm doing research, or if I'm lucky, I get to do it pre-market, and then I'm just like, okay, well, this is what I'm doing. But we're looking at right here, because that's what I had yesterday, and you have to recognize certain documents. Now there's a trader who I recommend following on Twitter. His name's Auspex Research, AUSPEX, and he's probably the best in the business as far as doing research. And basically, a lot of your big day traders that come out with these huge P&Ls, this is how they trade, because nobody has a $2 million account to go hit Tesla for 4,000 shares and pull it for $3. So this is how you get a lot of bang for your buck. You read these filings and you catch people participating in organized legal crime. These people are stealing money. Simple as that, and they have a license to do it. That's all you need. So what am I looking for here? This document right here, anything with an S, S1, S8, those are shelf filing. So when I say something's got a $150 million shelf, that means there's an S1, an S8, an S1A, which means it's amended. And you just start looking. Oh, look, $8 million offering. This is blank because they're not done with the document yet, but they filed the shelf. So they have to file an amendment. I'm going kind of fast.
Yeah, so Drew, maybe like for some people who don't know what a shelf is.
All right. Okay, so a shelf is a license to print money. Simple as that. It's a license to print money. You have a 4-letter ticker. Stock markets. The stock market is a license to print money. You're letting people have a piece of your company for money, and you get to control how many pieces you have. So if you own a company, you literally have a license to print money. What you do with that ethically is up to you. The big companies, they obviously have restraint. They choose not to continually print money like it's Weimar Germany, or Zaire, or where it's just like a lot of us have taken government. We know what happens when the currency gets out of control. The government just keeps printing money, and the value goes down. Same concept. So, and let me just throw this up on a chart. That's so messed up now. It's not even funny. That's dries. That's an extreme example. But anyway, so an S1 is a license, or a shelf is a license to print money. So they come out and they file something, and they say, we're going to print up to $150 million worth of stock, or whatever, 10 million or whatever it is. And that's a warning to a shareholder. Says, hey, we're going to dilute you. You better get out now if you don't want to be in this mess. Now, a lot of biosciences are very speculative. So, some people, they want to be in that, whatever. And I'll go through the individual scenarios another time. But it's a license to print money. So they file the paperwork, says we're going to print money, and then they file a document called an effect, which is this. You click on that. That's all it is. Notice of effectiveness, May 4th, S1. You see that?
So the shelf, the S8, right, or that you were looking at before.
Yeah.
What does that tell you? That they can do an offering at any time? Is that what you're?
Yeah, that means that shareholders have been put on notice that the company may raise up to the amount that they specify. And of course they can amend it, which is what they did in this case. You can change anything at any time. But I guess the gist of it is that when I see when I go through a company, when I click on it and I look at the filings, I see, S8, S1. I see all this, and I'm just like, okay, they're going to raise. I haven't even looked at a document yet to see how much. I'm just like, okay, the water's muddy, and if you combine that with the fact that there's no news, that means that you have an underwriter, which the underwriters are the ones. Okay, I'm trying to really summarize this. So companies, they cannot. They can raise money. They can file this form that says we can raise money, but somebody has to agree to give them money. They can't just open up their E-Trade account and just start selling you start selling shares. It doesn't work that way. You have to get a third party called an underwriter involved, which they'll say, okay, well, we're going to give you $20 million in exchange for 5 million shares, whatever. So that's $4 a share, just hypothetical deal here. So they know, because they're they've been on the phone, they've been talking, whatever. They know that APHB, we're going to do a raise for them. So this is where it gets very this is legal, but it's not very ethical. So the shareholder public has been put on notice that they will do a raise. You've been warned. They told everybody. Anybody that has two eyes can see this document. It was done before the run. And then all of a sudden, APHB, let me make that a little bigger. Oh yeah, and by the way, it was Turd City already. So you got people that are short that have just been riding it down. But all of a sudden, we have ourselves a problem for a man. I really need to simplify this chart. Here you go. You're gonna get Netflix. AP. Okay, no, you're not gonna get Netflix. I just ruined my platform. Great. Hold on real quick. Well, anyway, let me remove some of this junk. There we go. That's kind of an overbought, oversold indicator that just lets me remember that the music's about to stop. But so you have a stock that's now running on no news, but it's steamrolling people, and it's because you have an underwriter that knows they're going to do this deal, and they're gonna pump it up a little bit. So you have guys that are better than us at the stock market that know what we look for, and they're just like, well, what's the best way to steamroll a short? Oh yeah, here we're gonna pop it in the morning. We're gonna make it look weak, fail, and okay, floor it, and it's just no. If you're short and you're waiting for a dip, you're screwed. You're screwed. You have to eat it. You have to eat it on that sec right there. That's the only anyway. But without, that's more of the why. So how is that legal? Let me show y'all something that's going to be an aha moment to all y'all. And if y'all are asking me any questions, I can't. Oh, there's Netflix. I can't even see them. Okay, yeah. So the shelf was up. So this was filed on the 1st. This S8. They amended it once. So this is basically what I was looking at. Yeah. So I had enough information to know that something's up. So you have these underwriters that they're gonna loan this company money. they're going to buy their shares. They're going to loan them. There's all sorts of different loan agreements, warrants, ATMs, and they're all different. So you have to know, how they all work. But you just have to prepare yourself for certain scenarios, because you don't necessarily, the shelf allows them to issue warrants. It allows them to do an ATM agreement, which allows them to just sell shares whenever. It allows them to do financing. So you have you have this company that is this underwriter that's going to sell them shares, or excuse me, it's going to give them a big bag of money in exchange for shares. So you might be wondering, APHB. So you might be wondering, how is it lucrative for an underwriter? So anyway, fast forward today, they did an offering for $1.50 per share. How in the hell did they make money? This thing hasn't traded a penny over $1.21 all day, but they did their financing for $1.50, 6 million shares. How do they make money? I'll tell you. And this is the aha moment, and you will realize why all these fat cats, why all these people on Twitter post these 5-figure gains. Here's the aha moment. And you will never look at these again the same way. Same form that warned me, S8 from the first. I'm going to search for. Oh, it's not in that one. Sorry. Let's go for the amended one, the S1. It's in here somewhere. I'm searching for the word short. So, oh, no. Oh, okay. One more. Oh, look at this. Look at this paragraph. You were warned about this. Price stabilization, short positions, and penalty bids. Feel free to read this with me, and you're going to wonder how this is even legal. In connection with the offering, the underwriters may engage in stabilizing transactions, syndicate covering transactions, and penalty bids in accordance with Regulation M of the Exchange Act. And look at that paragraph. Look at that. Look at these. Sales by the underwriter of securities in excess of the amount of securities the underwriter is obligated to purchase creates a syndicate short position. The underwriter may close out any syndicate short position by positioning shares in the open market. Syndicate covering transactions involve purchases of the common stock in the open market after the distribution has been completed. So anyway, here's a form filed on the 1st. They warned you that they were going to short their own stock. So you have it here, folks.
That's amazing.
Do you see this perfect crime? They have a ton of money. They just pump it, short. And then it is in their best interest to tank it as fast as possible. And they know in their back pocket, they bought 6 million shares at $1.50. They can just cover their short position with. So right up here where, where everybody's getting blown out, they're shorting. Then it's like, all right, Bob, we got our 6 million. Okay, tank it. And look, no error. And then filing comes out $1.50. And then all today everybody's covering.
It's really amazing. It truly is. And so the signs that lead up to you, I mean, when you look through the filings, right, when it shows the whole list of all the different filings, and can you sort of see a pattern in the stocks that do the exact same thing every time based on what you see in those filings? So you see the shelf, you see is the amendment another one that you need to see usually to?
Yeah, you have to look at everything because it's always a work in progress, and the catch is that they don't know that their deal's going to go viral, because they need people to buy their junk. they can only manipulate it so much. So it's gotta catch. I've seen some that they just fall flat on their face. But you look at these S8s, and then this is, I'm just picking this one because this one's obvious. Here's one's not so obvious. This is today, and this is a work in progress. Oh, Eli. Okay, so dilution to 0 and then reverse split. So that's Dry's long game. That's how Dry's GBSN. If you find somebody that's just a habitual long screwer, that's just your money pot. You can just make money because what Dry's is doing is they're doing it as many times as the regulators will let it. They're going to step in. The NASDAQ people, the SEC is going to eventually delist them because they're just like, okay, that's ridiculous. Y'all are done. So you have to be prudent as a publicly traded company to not do this too much, because these companies are under the guise that we need money. We need to raise money to fund our next drug. So that's the story. And legitimate companies need money to finance their next drug. But a lot of people that have figured this out go, well, we can just steal that money. When I say steal that money, it's legal, but it's just like, we're just going to give, I'm the CEO, I'm giving myself a bonus. And these drug studies are junk. So like today, Workhorse Group, right off. Oh, and the 424 is the final version of the raise. That's once it's all done. It'd take me a long time to go over all this, but
so Drew, just looking at what you see there in front of you in these filings, does that tell you, is this look like a pattern of a stock that would do an offering one of these days or into one of these pumps?
Yeah. This is okay. This is that stock today, WKHS. So as soon as I pull it up here, I don't even have to go back 6 months. This is the first page. And I see two transactions right here. I see an effect. I see an S3, and I'm just like, okay, well, the water's muddy. They're very turdly, to put it mildly. They're guilty until proven innocent.
Right.
So I haven't even rolled up my sleeves and actually looked at it to see the details. I mean, I did today, but I'm saying just giving it a 5-minute. A 5-minute quick go over. I already know. I already know that I'm dealing with a turd, and it's be patient, because they're going to tip their. The reason why I say be patient is because when these guys do what they're going to do, it is in their best interest to tank the stock. So once you're on the right side, you're on the right side.
Yeah, exactly. So, I think a good way to go with these is, a mixture, obviously, of fundamental plus technical research, right? So if you have done the research and you know that the stock is likely to have an offering, that they're shorting the company and it's a squeeze, then once we get the signal to get short, we should have a lot more confidence to hold that position as long as possible, anticipating that the history is going to repeat based on what you're seeing in the filings, to either crash, do an offering, or some kind of shady manipulation like that.
Yeah. The scenarios there's so many different scenarios. You really have to know what you're looking for, because like WKHS or whatever it is, WKHS is not the same play as APHB. Is not. They're not. The odds of them having a filing after hours saying, offering $2, in my opinion, very slim. So it's not going to be one of those ones that you hold it overnight and the bottom falls out tomorrow morning. It's a different play.
Okay.
And I can tell you why.
Yeah, please do.
It's because they did a raise of 6.5 million shares for $3. And this was in January. Look at the daily chart. 2017, end of January. Let's see. January 30th? Oh, nope. February 1st. Oh, crap. February 1st. All right. So, do you see any way for 6 million shares to get liquidated after February 1st? I mean, I would say today was the first day. So those underwriters, there's multiple ways they can make their money. It's not just necessarily they're going to short their own stock, which they do all the time. But you also have to look at the volume. And there was 6 million shares that hit the market February 1st. So those 6 million shares have to come back out at some point. And just looking at the volume, you factor there's retail. There's it's not just the first time that the volume eclipses 6.5 million shares. It's like, okay, we're done.
Yeah.
I would say institutionally, I would say that volume's maybe 20% because you have to stabilize the price as you're doing your transaction. You can't just Dry sells it down to zero. They don't care, but you want to be responsible because you'll lose your listing, and that's a lot of time, money, and effort. You can't just tank your listing like that. You want because this is a certificate to print money. You don't want to just lose that. So you want to try to preserve your listing as much as possible. Trying to read this. Yes. Okay. I gotta break up this question a little bit. Junk company makes an S filing to the SEC that they're going to dilute the stock value, but not the date. That's correct. So it's they're going to dilute you, but they don't know. It's just it's a warning because you have to post a warning. The underwriter doesn't give them money yet. They come up with an agreement that we're gonna give you $5 million in exchange for X amount of shares. And as that agreement is finalized, the underwriter can, in many cases, manipulate the stock. So they'll send it up in the elevator, and then and this is elevator up, and then stairways down. So they'll short the stock, and then you'll see the filing where the deal's final, kind of like the APHB where it was. Let me show you the final product with APHB. So you have here's how the deal took shape. It was oh no, they PR'd it. You can PR it too. So the filing hadn't even hit yet. You're going to see a 424B4 that's going to hit tonight or Monday or something, but they PR'd it, so that's okay. You can PR too. So here it is. They PR'd it at 10 p.m. Eastern after the after hours is done. 6.9 million shares at $1.50 per share. So the underwriter, infinite money. They got plenty of money. They're money, tons of money. They're making millions of dollars a day. So they know that this is going to get PR'd, so they're just short. So that's why at the end of the day yesterday, once the air came out of it, it was relentless selling. So it was a combination of and with the SSR on, you can only go down if you have a long sell. So basically, every single dip buyer was shorted into all the way down. And then the offering news of the offering hits, and it's just okay. Well, we'll cover. So I really feel like now anybody that's interested in doing this, I haven't told you enough. Like I told you, like, if I told you one scenario. It's more complex than that. But this is just a little a primer, if you will, on the power of doing fundamental research.
Right.
Because these are publicly traded companies, and Shane, the reason why it's legal is because they warned you. They didn't say do anything they didn't say they were going to do. Yeah. So why do you think why do you think that somebody makes 50 grand shorting this company? It's because they're comfortable with the risk. They're comfortable with risking 30 grand or 20 grand, or they're comfortable with a technical setup up here. They know what's going to happen, and they're just to hell with it. I'm confident. I'm gonna go 20,000 short. But yeah, so and it doesn't have to be 20,000. It could be 250 shares. You have to know this. So there's so many tricks up these companies' sleeves. You have to know this so well in order to do this, because there are scenarios where, like dries, the reason why it went so out of control is because everybody knew it was a turd. And that was actually a really interesting scenario where I think it almost blew up one of the underwriters, because these guys are shorting their own stock, and if too many people come in and buy the thing, then they have to cover too. So that's just a hilarious scenario where the screwers get screwed for once. But so even with fundamental research, it doesn't protect you against a genuine squeeze.
Right.
The APHB was a turd at 250. It was worth $1.50 at 250. And you didn't live to see the end of it because you got blew out.
Exactly.
So,
right.
So you have to use technical knowledge. So my green line is my 50 EMA. And if I see something that's just like, okay, this is a pumped up turd, this is clearly pumping. It's just like, okay, don't even short it till it goes on. Wait until it goes under. Why not?
Under. I agree. Yeah.
And holds, because you had. I'm not. Jeff's technical. This is him. This isn't me. I just do the paperwork. But it's just like, look, even if you say you tried it right here, right here.
Yeah.
Okay, what's your stop? Here, there. Okay, little damage. You didn't just get blown out.
Yeah.
You didn't get blown out. You lost money. Whatever. We all lose money. Okay. All right. Well, you're a turd. I'll be back. Okay, here we go again. Okay, risk high days. Oh, look, I got it. I win. See? And you won't blow out. You're staying out of danger.
Yeah.
Because you know the end game. You know that they're going to do this. So just stay out of the way.
Stay out of the way. And then once we get a signal on the short side, we can kind of use that fundamental research to be a little more confident, to hang on, get the meat of the move on the backside. I think that's the best way to go. The first real trigger I got was 409 break. That 409 break was a big support break in that chart yesterday.
Oh yeah, right in this area.
Yeah, at 420s. I tried to get short the first time at 434, and I was going to risk off 50. and it was on a pop. But then after that, 406 was the next major support break trigger. And from there, it never looked back, right? So,
yeah, it's because you know what's going to happen. So it's just a matter of time. And you get,
yes.
but it's the whole idea is, if I threw a dart at a stock, I'm 50%. Might go up, might go down.
Mhm.
If I use a technical indicator, I just improved it to 60 to 80%. But if you throw the fundamental in there, you just made it 90%.
So you're
Sorry.
noticing patterns in the filings that you see. So if you notice shelf is, all these different things that you mentioned earlier, it's the same way that we look at charts and look at patterns in the charts to make decisions on stocks. You can look at those filings and notice patterns. Say, oh, this looks exactly like the other stock that was pumped and then dumped, last week, right? So you look at these and you can tell that it's a turd right away, almost, right?
Oh yeah, 100%.
Yeah, yeah.
100%. If you have companies that raise, then you have companies that don't raise, and it's if you catch them on their first now there's also I so much to explain. Okay, I also read their quarterly filings, the 10K, the 10Q, and I get a sense of oh gosh, here's another rabbit trail. Okay, so there's in order to keep your listing on NASDAQ, there's rules. You can't just dilute it down to zero and just keep doing it. You have to there's four main rules that you have to have as a NASDAQ listing. You have to have a dollar minimum bid price. Have to. You have to have $35 million. It has to be the market value of your company. That's every outstanding share times the value of your stock has to equal $35 million. Sorry. It's one of three things. Dollar minimum plus one of the three. $35 million market value, $2.5 million shareholder equity. That means that the shareholders have an equity of $2.5 million, or they have to have $500,000 of net income for the last reporting period. So a dollar plus one of those three. If any one of those falls out of place, NASDAQ gives you 180 days to come back into compliance. So you'll see these pumps for the sake of them keeping their listing, and these underwriters are happy to help for a small fee, because they'll get their business. So when you have these companies that are trading at 60 cents that are on the NASDAQ, like anything, well, whatever. I can't even think of an example. There was this one that was like MTVC. So when you have a company that's been a habitual turd forever, these guys, they've fallen out of compliance with NASDAQ for a dollar. They need to keep a dollar minimum bid for 10 consecutive days in order to keep their listing. And they also need to have either $35 million market value, every outstanding share times the bid price times the current price equals 35 million, or $2.5 million shareholder equity, because most of these companies have zero net income, much less 500,000. So there's a lot of tricks that they have to do to stay in compliance, because if they don't, jigs up, they go to the OTC, they can't raise no more money, so the game's over. So they're so like with MTBC, they had to pump the price over a dollar, and they also need to raise because they need to increase the value of their shareholder base. So like so with GBSN, That was one where they were struggling to stay in compliance with GBSN. They're struggling to stay in compliance with their listing. Look at this chart. Isn't that cool? Oh, wow. Yeah, this is $400. But so what they're having to do is constantly reverse split, sell shares, reverse split, sell shares, and they're increasing their share count while the price is decreasing because they keep diluting their base. So it's like a race against time to keep their market value up without, it's just this really crazy tightrope act. But GBSN, they lost the fight. They got delisted. And that will happen to a lot of these because eventually they'll just, the dog and pony show will run out. But that's just, there's so much. CETC, it's really up to them. It's up to the regulators. They have to, I don't want to make you feel bad, Dennis. There's been some that have been months. I'm sorry. It's up to them, and they don't care. It's just they'll get to it when they get to it. And you'll get handsomely rewarded. You'll cover it like less than $1, but might be a while. But there's so much. There's so much. Don't. I would suggest that you follow Auspex here, AUSPEX Research. I suggest that you follow him, but there's so much. Just don't trade. If you want, read Auspex. I can't even say his name. Did y'all see it? AUSPEX.
Yeah, I'll link it in the chat.
Yeah. Read his stuff. It'll take you a while, but read his stuff. He's the best, and I learned most of the stuff from him. But yeah, the big kicker is they can short their own stock, and then it's just like, okay, well, it's just a matter of time. But there's so much more I have to. Don't trade off anything I told you today, but just know that there's a long process that goes behind the research, and it is truly the closest thing you'll have as a retail trader to inside information, because you literally know you have a very decent idea of what they're going to do before they do it. You can narrow it down to a few scenarios, and then it's just a matter of taking a position and waiting.
Awesome, man. Thank you so much for taking the time to do this. This was really, really good, man. I would love to have you back on another time, and we could dedicate a little more time to it, and sort of just get like a presentation together where we can sort of start to understand some of the filings more in depth and stuff like that.
And yes, there is a scenario where the stock doesn't drop. There's been there's so many different scenarios. It just when I say turd, don't think it's like APHB. Drew said it's a turd. No, it's they all have different. So some of them are money shots, and you have to learn how to recognize those. And some of them are just like, okay, well, yeah, they're here. I can make a little money here.
Drew, thank you so much for doing this, man. I think we all appreciate it a lot. It definitely opened my eyes to some things for sure. And I'm going to go back over this a few times and pull some information off of it. I've been a technical trader for a lot of years. It's always worked well for me. But, if we can mix what we've been kind of doing lately is trying to kind of mix my technical signals kind of in with some of his research. And then if we can sort of combine the two together, it's really, really a powerful tool, right? Having both sides of it. So the good risk management, the good entries, signals, and then using that research to really have the confidence to know that, hey, we can hold this trade longer than a usual signal. This isn't a scalp trade anymore. This is now, one that we're going to want to hold for the rest of the day. Right. So, yeah, man, I really appreciate it, man. Anyone have any questions for him before we wrap up? Okay,
it's like a White House press briefing. It's about to happen.
If it's too much, man, we can always just do this another time, Drew. Whatever works for you, man.
Yeah, it's Friday. I don't want to keep it. This ain't going nowhere. These companies, they do this every day.
Yeah.
Oh yeah, short. I even when I think it's going to go higher, it's really hard to go long because you know the end game. So I mean, this is why all those big traders are short biased only. It's just because you never know how high it's going to go, but you know once it's done where it's going to go.
Yeah.
So yeah, the fundamentals, the way I use them, it's really strongly short biased.
Yeah.
How did I learn this stuff? It just the easiest source is Auspex Research. That guy he's made his money and he doesn't care anymore. Simple as that. He gave away the Willy Wonka golden ticket to anybody that would take 5 minutes and figure it out.
Yeah, that tweet longer actually is there. I checked it out and I posted it in chat for you guys if you want.
Yeah, I mean he's made his money and he doesn't care.
I know it's really like giving away a system, right? He's he's really broken it down. I've actually taken a glance through it, but I didn't get too into it. But yeah, definitely eye opening, right?
Yeah, and Auspex his mentality is he wants to take positions that are, I forgot how he worded it, but it was just basically things that will pose the least threat to him in the long term. So if he's wrong and he gets jumped over, maybe he eats it, but he ultimately you want to pick things with a fundamental advantage that you know that you're going to be right. It's just a matter of timing.
Yeah.
And with that comes you have to exercise great restraint because with this system, you can be completely right, but also completely wrong.
Awesome, Drew. Thank you so much for doing this, man. Really appreciate it.